Hello. In this video, we'll continue talking about gross income problems. This is problem number 5. So in this problem, Banana is a tax accountant. Now, Banana performs tax services, tax preparation services for her dentist, which are worth about $750, and that's based on her normal billing rate. Now, Banana does need some dental work. So rather than pay Banana $1,000 cash, Banana is going to have $1,000 worth of dental services performed, but Banana is only going to pay $250. And again, Banana performed $750. So the idea here is that Banana is going to trade $750 worth of services, the tax accountant services, preparing tax returns for dentists, for dental work, and then the remaining portion is being paid by cash of $250. So Banana, let's write this out. Whenever you have something like this going on that's a little, might be a little confusing at first, if you're taking any type of exam or standardized like a CPA exam, or simply if you're doing a law school exam, or just a normal college or university exam, it's always helpful to put down the parties and kind of just think about what exactly is going on. So we have Banana, who is the accountant, the tax accountant, right? We're talking about taxes, and there's the tax accountant. And then we have a dentist who obviously performs dental work. Dentist needs tax return services because they have to file every year like everybody. Banana needs the dental services to keep Banana's teeth, keep her teeth very healthy. So the idea here is that they want to do a trade for services. So Banana is going to perform tax services, and in exchange for tax services, the dentist is going to perform dental work. Now, the dental work is valued at $1,000. So this is the dentist, right? Dentist, I've circled that or square that off in purple so you know who's doing it. The dental work has a fair market value of $1,000. And then the tax services have a value of $750 fair market value. So you're probably saying, okay, well, Banana is performing services worth $750, dentist is performing services worth $1,000. That doesn't equal out. And you're right. These are arm's length parties we're talking about here. There's nothing in the facts that indicates they're not arm's length. So they need to equal. So that's where the $250 cash comes into play. Banana also pays $250 in cash. $250 in cash. So it's the $750 plus the $250, which is total $1,000, for $1,000 worth of services gives us $1,000. 1,000 equals 1,000, and that's why we had to do this. So again, just to summarize, to understand what's going on, this is, by the way, called a barter exchange. We have two service providers, Banana, who's an accountant, and the dentist that performs dental work. Banana wants dental work, dentist wants tax preparation services. So what they're going to do is they're going to exchange services, but because the services don't exactly equal, Banana has to pay some cash to sweeten the pot and make things equal so that dentist is fine with this transaction. So that's why it's a barter exchange, because we have services, and there can be cash on one or both sides to make sure that it equals out. All right, so that's an idea there. So now the question becomes, from a tax standpoint, we're going to look at both sides. Is there any gross income? So if you recall, gross income is defined as any income from whatever source derived. Very broad definition under Code Section 61. But we have the case, our good friend, Glenshaw Glass, which says that we have to have three things to have gross income. The taxpayer has to have three things. And that is accession to wealth, which means our net worth has gone up, which again, net worth is assets minus liabilities. We have a realization event, clearly realized. So we're talking about severance, a legally severable event. So realization. And finally, dominion and control, which means there's no strings attached. You can do what you want with that item we're talking about, which is potentially income. And remember also that when we're looking at our 5 questions, we have what amount is income, and that's what this Glenshaw Glass gets at. Who has income, and when. When is their income? Now we're looking all in the same year. Assume this is all in the same year, so the when question from a tax standpoint, well, these are both calendar year taxpayers, we'll say, so it's both in the same year, so the when question is not an issue. It's all going to be in the same year. Who, we're going to look at banana and dentist separately, so we'll look at those individually. And then what? Well, it's easy to see that banana gets some services, dental services. So does banana's net worth go up? Well, you're thinking, well, are services considered an asset? Well, the idea here, I would say, is you're looking at either assets going up or liabilities going down. If banana had to pay the dentist cash for the dental services, $1,000, what would happen to the assets? Assets would go down, right? If you think about it, asset being cash, well, banana have to pay $1,000 cash, they go down. Because banana is performing the services, the assets stay the same rather than going down, so that does increase net worth. The same is true with what's easier for the dentist, because you see that dentist gets $250 cash, but there's also tax services. Dentist would have to perform tax services for $750 plus dentist gets cash, so it's actually $1,000 net worth going up. Realization. Well, remember, anytime services are performed, so tax services and dental work, there's realization because the service, it's severable from the actual outcome or what happens. Dominion control, are there any issues with dominion control here? No, there's no issues with dominion control. There's nothing that's restricted on the cash or the services or whatnot. So we have gross income. The question becomes, how exactly do we record the gross income? What exactly takes place here? Well, again, we draw this out. And the best way to think about it is think about it constructively with using cash. If banana performed services worth $750 for the dentist, and the dentist did not perform the dental work, what would happen? Well, this would be a deemed $750 of cash received by banana. Again, think about it like this. Constructively, if dentists did not have dental work that banana could have, but dentists wanted banana services, then dentists could pay banana $750 in cash. What would happen if banana got $750 in cash in exchange for the services? We would have Glenshaw Glass, right? Because banana's assets would go up by $750. We'd have realization since it's service and no dominion control issues. And then it'd be easy. It's a $750. Boom, we put that on a tax return. So that's not an issue. We apply the same reasoning here. Banana gets services worth $1,000. However, banana has to pay $250 for that. So the idea is that it's the net amount, or simply the constructive amount. It's the deemed $750. So the idea is that you deem whatever portion of services performed. So banana only performed $750. It's not $1,000 because banana is paying $250 of the $1,000, and then the other portion is services performed, which is a taxable event and creates gross income. So it's only $750, not $1,000 for banana. What about the dentist? Well, it's a deemed. So for the dentist, we look at again the deemed amount. This one's $1,000. If banana did not have any could not provide any services, but banana needed the dental services of $1,000, what would banana do? Banana would pay dentist $1,000 in cash. So dentist would get $1,000 of cash. Again, we meet Glenshaw Glass, all these things. Boom, we have $1,000 of gross income. So it's a deemed $1,000 of cash, $1,000 of cash received by dentist. So on banana's tax return, banana has to record $750 of gross income as a result of this transaction, and dentist has to record $1,000 of gross income. So whenever you have, there's a few takeaways here. Whenever you have a barter exchange situation, it's important to understand what exactly is going on. That's why we drew this little map, right? That really helped. The other thing that's really important is you don't really just look at, okay, look at banana. We don't simply just look at, okay, does banana include $1,000 because that's what banana is getting, $1,000 over services? No, you look at what types of services banana is performing. Banana is performing $750, and again, what if the dentist had to pay for that with cash? Banana would only have 750, not 1,000. So that's how you really think about this reasoning. So this should help you whenever you have a barter exchange.